Good afternoon. Good afternoon, and today is September 27, 2023, and it's a Wednesday. It's a midweek. It's the third trading day of this week. It's very excited, right? Tomorrow will be end of this week, and it will be the last trading week of September. And look like September is a Dow close month, right? Look at that month right here, September. That's Dow close right there. So the average moving for September is 30. Wow, look at that. The average high and low for September is $12.15. But this September 23 is $31.38. It's almost, 3 times right there. Almost, not exactly 3, right? Because 32 you times 3 will be 36, but here's 31, so almost 3, around 3, right? Less than 3, you can say that. So that's a huge move right there. So let's see what our game plan for tomorrow, because tomorrow or Friday we're gonna take a real trade, right? That's the reason why we want to play on Friday or Thursday, because we want the market show up its hand on 3 days: Monday, Thursday, Tuesday, and Wednesday. So one of the trade idea we can try out is that we're gonna do so-called power up trade, right? Or open, high, low, and close. So this month, maybe this is the high of the low of the month, September, right? 422.29, that's the low. And then it will close, above the low. So that is one of the trade idea first. When we go into Thursday and Friday. So basically the trade idea is power up 3, right? Which is manipulation, right? Distribution, consolidation, consolidation, manipulation, and then distribution. That's power 3. It's similar concept to open, high, low, and close. So we're gonna play that trade idea right there. So it's gonna be low, right? And now it's gonna close above the low. That's what I mean. That's trade idea for to go in. Okay, look at the idea. Okay, right here it breaks down to this. And look at the 1 minute time frame. Not 1 minute, I mean daily time frame. On daily time frame, okay, I play out with some script right there. Let me turn it off. So give me a second to turn this off. Alright, off them up now. So from 1 hour, I mean not 1 day time frame or daily time frame, you see that? So we mark it down at, I think, start from yesterday. We already marked out this February out, and we anticipate that it's gonna retest it. But one thing that we did not anticipate that, yeah, we did, but it would not say out loud that it retest the low of this photograph. We thought it just, retest, the high. We don't anticipate that all the way, maybe next week or so, but that's our anticipated, and market is, really surprised that it go all the way deep right there. But as you see right there, the huge gap right there, and that's the reason why it come down and it refill that gap, and you can see the huge consolidation right there. So if this base, they can this support level around here hold, then we can see a rebound. Otherwise, we can see more sell off right there. But this is a very heavy solid base right there. That is our assumption right there. But the markets always surprise you, right? So one thing right here, we learn from this. This one we help us better understand, right? One thing I think we did, I want to review the market structure a little bit, so it would help us to better digest how the liquidity run and how the price is forming, right? Okay, let's say we see that structure is go up, right? So when you see this, you keep going and buy at the low, right? So the two things we need to do in order to help us to better, right? We have two type of trades, or we call trend follower. Trend following trade, right? Or setup for that matter. And the second one for us is called retracement trades. Or setup. So basically those two setup. I think it's more than okay. Yeah. Yes, it's retracement. Or you can say no. I think it's not so clear correlation trade. Trend following and what you call that is yeah, you can call retracement. I think there's something else, but forget about the verbiage right now. But we grab our idea retracement, or you can say something called reversal for that matter, right? Or you can say top, picking top and bottom. Top or bottom. But some other people have another name for this. I mean, another call technical term, another call I think anti-climax, right? Just the same idea. So basically, we always have these two setup. You can generate the two setup right there. So the very easy is trend follower, right? In this case, we have an uptrend, so you see that every time there is a retracement, a low, buying the low, buy the low, basically buy the low, buy the low, and when we will stop them, right? We stop them when we see that there are a market structure shift. Okay, this is the high, right? Let's say this is the high. Now, when it uptrend and then the low right here, when it uptrend, we don't want it to break the low. Okay, so that's this low, it stay below, make a high low, high low. As long as this below, I mean above this, then we could keep follow the trend. However, the minute it broke, you see like this one, right? So it's break on what day is this? August 18. So August 18, it tells that it broke the trend right there. So it break this high low on August 18. See that? Give me just a second. Okay, so that means we see the market structure shift. Then from there, we're not gonna engage any long trade right here. Okay, we have to watch for the last order block and a failure gap for the source of fake retest. If it break through this, then it continue the trend. However, if it failed to do that, then go in and short them, because this already tell you it's a market structure shift already. All of it is just the sell-side liquidity trap right there. You see that? All of it is just sell-side liquidity trap. And you see this order block and failure gap, huge gap right here, and just retest. So it's a short setup right there. It's a short setup right there. You see that? Yes. So you can short right here. Okay. If you mix the short right here, you can short it here. Then the target gonna be a sell-side liquidity just before this one. I mean, the best one, the conservative, is the sell-side liquidity that it already broke. You're gonna broke that again, and it must dig deeper to the sell-side liquidity right there. So that's one of the things we can learn right there. So we can see that this short is very low risk, low risk but high reward trade right there. Whenever we see the market structure shift right there, and we see an order block and a gap right there, and go in short. Sometimes it's not working, right? Because sometimes maybe this is just a retracement, it could continue, but this is a very high probability. So it gives us an idea that when you see the market structure shift, and when you see this is a sell-side we will drop right there in order to going down. And if you look this monthly, right? Let's look at a weekly. You integrate this, look right here. So it's in the weekly. You also see this is a short setup right there. Exactly, you see that it reflects well on the weekly candle also. I think I take that somewhere around, I think around Monday something. Let me see. Yeah, right here. So we see market structure shift right there. You see market structure shift on the weekly candle. But look at this. If we look at so if we look at the daily table, daily chart, we see the market structure a little bit earlier than the weekly. You see, we see the market structure shift right here. But anyway, in the weekly, we start see shift right there. And we make some note right here. So here's the opposite, right? When you see this market, because when the market on the Dow move, you don't want it to break the swing high, and it break the swing high. And you can see that as soon as it break the swing high, it go down, it do the last sweep of a sell side liquidity. Then it start make a high low, right? And then you mark the order block on that higher low and wait for it to retest of that order block. You can go in, boom, that is where the order block retest, you can go in there. So similar to here, we start see the market structure shift right here. All right, I'm back. Anyway, yeah, that's how we read the market structure that we have to identify the opportunity for us right there. So it's the weekly right here. Let's look at the weekly we have right now. Oh, right here we see that. Oh, so we only see the shift right here, but actually the shift happened right here on the market structure shift on the daily. You already see the shift right there. You see that? Yep. Because look, it does look like swing low, but on the daily it's a swing low. So it's shift right here. So we should short right here because this is a retest. It will never have another retest up there first. So we miss opportunity right there. If we look at the weekly, we miss opportunity. But if we look at the daily, we see it's forming right there. So that's the reason why we need some more of the time. We need to go back to the low time frame to identify the early sign of the market structure shift. So it shifts from buy side to sell side. Right here it is from buy side to sell side. So it's gonna go down and take all the sell side liquidity. So that's an idea. Okay, so go back here, we see the shift right there. It broke the low, that means the market structure shift, and all of it is just the trap buy side, sell side before it go down. And dip it into the sell side liquidity right here. Yep. So if we look all of this, I think will help a lot to identify the trade opportunity for us, or at least we can form a right, trade idea. We can in sync with the market, in perfect harmony with the market right there. Okay, now go back to the 1 minute time frame. Right, you see the move today is like a V shape right there. And this morning we take the long trade. Can you believe that? Yes, that's our first instant right there. First instant right there to go long. And we learn, great lesson right there. So we have to make sure we in sync with the market, otherwise market will tell us, or we teach a lesson right there. So the first long trade we're going at 949 or 950 right here, right? We're going here. The idea is this auto block, further up and retest. Yeah, that's our idea. Okay, let's see. And stop loss 59, and then we say that if we better wait for the better entry right here, it should, you see this candle at 10, it's supposed to go up, but all of a sudden it come down. So that is the moment that the flush or the flip it turned right there. It looked like a switch, it turned, right? But instead of go up, it turned to opposite direction right there on the candle at 10. You see the candle at 10 right here. It's a huge up close candle. We take the screenshot in the real time. You see that? But it turned out it's not. You see right there at 10 in the real time is the up close candle. You see that? That's where we want to go in. But however, the second we say we go in, it turned into the down close candle right there. So that's the moment we need to go and short. And after that, it come back to that candle. You see that? Come back to this switch on, switch off candle right there. It's a breaker right there. And it went down from there. So that's our idea right there when we take the long trade. Second, and then we got a stop loss hit. We got a stop loss hit right there in this candle because we put 5 cents below 64, so it's gonna be 59, 426.59. Yes, 426.59 right there. And we have a risk reward right there, but we lost. So we learned a lesson from there that don't go long when the market is in sell program. That's basically you have to wait. And how long I have to wait? As long as the market tells us to wait. So we have to listen to the market. Okay, we try to go along a second time. It based on the 15-minute time frame. Right, the idea that we believe is auto block right there and retest long setup, and every time we time about 10-15 right there. But we learn lesson also. Okay, here's the lesson. So when we go in, right, let's look at the 1 minute time frame when we're going. So we're going right here at 10:18. Okay, so 10:19, and we saw the sell target were taken, right? Sell target and buy were dropped right there, and we target around here. So that's our logic when we're going, and our stop loss is 475. I mean 425.75. Okay, let we see, and it moved into our direction. So but however, it hit into this around this bearish breaker right here, and look like having rejection right there. So we were thinking, you know, should we move our stop loss, or we should, you know, leave it as it is? And we decide to move because the short setup still valid. It not break. It will be beautiful if it break through this, right, and then it retest, but it did not break through. It got rejection. So that's what make us to pondering about the decision whether we move stop loss, right? Yeah, it led to that decision, and we did move to 2636. Yep. And it's a good thing that we move. On 32, we get our stop loss hit right there. Just 1 cent right there. You know, it hit 35 right there. So we feel like, oh man, the market's just stop it out and then it's gonna rally. But we surprised. We got surprised. Where's my... Yeah, we got surprised. 36, right? Hold on. When did we get stop out? Yeah, at 32. 32 right here, we got to stop out. We thought, oh wow, it stopped out and then rally because big candle, but it is to now it like sells out, we will drop again, and it goes short again. So if we don't stop out right here, we completely get wiped out and we lose again. So the first trade we lose 34 cents, but this trade we gain 20 cents back, so it's not bad at all. Let's see what else. So we learned the lesson, right, on the 1 hour time frame. So here's the idea. So here's our observation. We learn. Basically, if we start below 50% of prior day range, right, here's our prior day range and the 50%. If start below there, then if we want to go long, then wait for it to rate the buy side sell side liquidity, which is the priority low right there, sell side liquidity. Let's see if that observer is right. That's the reason why we say okay, wait for the liquidity rate for the priority low right there, right at 10.57. It just 1 cent below, then we can go in at a retest. Okay. However, this trade is also lost, right? Got lost. You know why we got lost? Look right here. Where am I? 1 minute. Okay, so we say that okay, so we go in at 11:07. 11:07. Okay, basically we're going right here. However, it rolled a little bit right here and then it still stop at out right there. So if we go in right here, then we put our stop loss. That's the going on. Stop loss below this, right? So we will lose. If we're going right there, we will lose 40 cents, and we got that that hit at around 11:45. We got stop out again. See that? So we have to put that in there as a lesson learned for us. So we have to be in the direction of the markets. Otherwise, we got stop out. Even though we saw beautiful setup right there, beautiful, right? Auto block, failed up, and retest, but we are in again the market move. So we got stop out. Yes, we're here. So stop loss got a at 11:46. Right there. Yeah. Anyway, all those 3 long trade not working out. You see, we're going too early. Basically, it go deep to take this sell side liquidity from the from a daily time frame right there. But right here I have good setup for us right here. Wow, you see that? Come down here, photograph, it take the buy sell liquidity. Let's see if we see any market structure shift. Yeah, right here, right? So the market structure shift right here, it have to be below this level, right? In order to, but it broke that, so market structure shift right there. Then it make a high low. After make a high low. Yes, so market structures, it make a high low right there. Okay, then we go in at the retest right there. Yeah, we need to mark the order block where to make high low, and then we go in at the retest of that. So that's an idea. Anyway, time is up. We got to go now, and thank you, and talk to you again tomorrow. Bye for now.